In view of the pandemic and the related work from home social distancing protocols, the MSF and the fixed rate reverse repo windows were made operational throughout the day, instead of only at end of the day under normal circumstances. This passive mode of liquidity management worked well throughout pandemic conditions in ensuring adequate provision or absorption of liquidity as warranted by the evolving market conditions. With the progressive return of normalcy, including transient demand for liquidity from the Reserve Bank, it is logical to restore the revised liquidity management framework in order to make it more flexible and agile. Accordingly, 4 decisions have been taken. First, variable rate repo operations. I repeat, variable rate repo operations of varying tenors will henceforth be conducted as and when warranted by the evolving liquidity and financial conditions within the CRR maintenance cycle. Second, variable rate repos, that is VRR as I would call it, variable rate repos and variable rate reverse repo, that is VRRR of 14-day tenors. So variable rate repo operations and variable rate VRRR auctions of 14 days tenor will operate as the main liquidity management tool based on liquidity conditions and will be conducted to coincide with the CRR maintenance cycle. Third, these main operations will be supported by fine-tuning operations to tide over any unanticipated liquidity changes during the reserve maintenance period, that is during the fortnight ending on the reporting Friday. Auctions of longer maturities will also be conducted as warranted. Fourth, with effect from 1st of March 2022, the fixed rate reverse repo and the MSF operations will be available only during 17:30 hours to 23:59 hours, that is from 5:30 p.m. to 11:59 p.m. on all days and not during 900 hours to 23:59 hours. So instead of 9 a.m. in the morning till 11:59 p.m. in the night, now it will be available from 5:30 p.m. to 11:59 p.m. in the night, and this will be available on all days. And this is this revised timing of all day operations of this reverse repo and MSF. It was, as you would recall, it was instituted on 30th March in response, 30th March of 2020 in response to the pandemic situation. So now that on the liquidity front we are returning to normalcy, we thought it was time to go back to the status quo ante. Market participants are advised to shift balances out of the fixed rate reverse repo into VRR auctions, VRRR auctions, and avail the automated sweep in and sweep out facility, that is ASISO facility, in the eKuber portal for operational convenience. This sweep in and sweep out makes the entire process of, if you want to utilize the MSF facility or you want to utilize the reverse repo, fixed rate reverse repo facility at 11:59 or after 11 o'clock in the night, then the system is automated, and we have put in place what is called the ASISO facility. The voluntary retention route scheme, that is the VRR scheme, it's different from the VRR which I referred to earlier, that related to the repo operations. So this is the voluntary retention route scheme, was introduced in March 2019 to facilitate long-term investment by foreign portfolio investors, that is FPIs, in debt securities issued by the government and the corporates. The response to this scheme has been very encouraging. It is therefore proposed to enhance the limit for investments under this scheme by rupees 1 lakh crore from rupees 1.5 lakh crore at present to 2.5 lakh crore with effect from 1st of April 2022. This will provide access to additional sources of capital for both domestic debt market, including the government securities. The next announcement is very important for very important with regard to digital payments and with regard to government implementation of government schemes. And this relates to enhancement of the cap under the e-rupee, which are basically prepaid digital vouchers using the UPI. The e-rupee prepaid digital voucher developed by the NPCI was launched in August 2021. The single-use cashless payment voucher has a cap of rupees 10,000 at present. It is now proposed to increase the cap of e-rupee vouchers issued by the central government as also by the state governments from rupees 10,000 to rupees 1 lakh per voucher and permit such e-rupee vouchers to be used more than once until the amount of the voucher is completely redeemed. This will further facilitate the delivery of various government schemes to the beneficiaries more efficiently.